Let's see. We good? We live? We are live. Let me go ahead, send out the notification. Okay, we are good to go. And I think I'm in a particularly good mood today. Because, oh boy, were my calls right yesterday? Oh man, they were incredibly great. We have a couple of ECB meetings going on right now. I was in the middle of writing up some more stuff for the stream for my notes, but we got an ECB meeting coming out right now. Not an ECB meeting, but we got an ECB speaker coming out, and then in 25 minutes from now, we have another ECB speaker coming out. But you know what I'm going to be doing today? I'm going to be covering some more Bitcoin stuff because today we had a lot of news when it came down to Bitcoin. And I'm going to be probably bringing up again some stuff other people are overlooking when it comes down to at least going over some SEC context and history. Like, for example, going back and talking about Coinbase and their Wells notice, right? And then actually putting down some proper links for all the official responses. I actually should go ahead, copy these notes, and put them into the description of the video. Okay. How is everybody? Things are going so far so good, and we're getting the first bit out of ECB not. We will keep tightening policy until we see inflation returning to 2%, but this must be done step by step. Inflation is still way too high, but the most is behind us. Okay. Things you just gotta do to make sure that when, I don't know, maybe I gotta stream like an hour or so earlier. Let's actually pull up the ECB chart. And by ECB chart, I mean euro dollar chart, my bad. And then go to a 1 hour. Check it out, how price is reacting to these comments. Let's see. Underlying price pressures will prove more difficult to bring down. Okay. I am seeing first indications that monetary policy tightening is being transmitted to the real economy. Okay, that's good. But obviously, not still a hawk. Not still a hawk. Yeah, price pressures in wages and services are harder to bring down. So until wages and prices come down, I don't think hawk's gonna stop being a hawk. I have yet to see the full effect of ECB tightening. Well, I think that's going to send euro a bit higher here. You can actually see it's having doing its little dance here, but probably by the end of the hour it'll be green. It'll probably be green by the end of the hour, based off this information. And we have another ECB speaker coming out in about 25 minutes. So we'll keep an eye on this throughout the rest of the stream. But let me get now into, because I think that not is done talking about what he wants to talk about when it comes down to ECB, his expectations. I think we got the best out of there. I'll have the news open just in case I see something flash red, and then I can quickly bring it up. But let's go to the big news with Bitcoin. I'm going to pull up this chart here, and then go to a daily time frame because I got all sorts of stuff here. So first off, we got this. So actually, I should just hide all this stuff here. Look at this. Just look at this. This is a $1,400 move lower. So the leading story here is simply that the SEC has filed charges against the CEO of Binance. Right? See that right here. Charges include operating multiple unregistered exchanges, broker-dealers, and clearing services. On top of that, misrepresenting trading controls and oversight of the Binance.us platform and the unregistered offer and sale of securities. So, in reaction to that, we had quite a dip. Now, one thing I read the report, I read the complaint, and there was something I found particularly funny. So let me read this out to you. The complaint alleges that, in reality, Zhao and Binance maintained substantial involvement and control of the U.S. entity, Binance.us. And they controlled that behind the scenes. And then Zhao directed Binance, the overseas version of Binance, to allow and conceal many high-value U.S. customers continued access to Binance.com. Now, this is the funny part. In one instance, the Binance chief compliance officer, the guy in charge of making sure you're following the law, messaged a colleague saying, quote, "We are operating as an effing unlicensed security exchange in the USA." Bro, oh my god. Bro, I just the bro at the end of that. It just reminds me, crypto bro, all this stuff. Like, we are operating a fucking unlicensed security exchange in the USA, bro. This is the guy in charge of making sure you're following the law, and he's like pulling out his hair, it sounds like. This doesn't seem all too fantastic for Binance. At least some of the people working there. Now, I also read Binance's response. Binance, a lot of people are just reading third and second party articles and tweets and whatnot. When stuff like this happens and you're, professionally trading, and you're professionally trading these assets, you should seriously just go straight to the actual articles and spend the damn 5 minutes to read this stuff. It's really not that big of a deal. But it makes a huge, huge difference to how knowledgeable and how competent you are when you actually approach the assets that you're trading. So what did Binance say in reaction to these claims by the SEC, by this complaint? Well, to quote, "Rather, the SEC's actions here appear to be in service of an effort to rush to claim jurisdiction ground from other regulators," because the CFTC has been in charge of crypto as a commodity, right? So now the SEC, so what Binance is saying here is that the SEC is encroaching and trying to regulate an asset that they don't actually have the authority to be regulators of. So Binance continues saying, "And investors do not appear to be the SEC's priority," which is kind of fun because that's exactly what they mentioned in their complaint, is that, hey, you're letting some people have unfair access to this Binance.com, even though they're U.S. customers, and U.S. customers are not allowed to have access to Binance.com. So, because of our size and global name recognition, Binance is now an easy target and now caught in the middle of a US regulatory tug of war. Now, I in the Discord during in the crypto chat, I said, "Hey, you know, it wouldn't surprise me if Brian Armstrong, the CEO of Coinbase, right? Coinbase, he got into a spitting match, right, with Zhao, and also Zhao got into a spitting match over Twitter with Bankman-Fried. Zhao likes to get into his Twitter fights." If I could bring up the blog. I do have it mentioned. But back in March, when the SEC gave Coinbase their Wells notice, I went back today, and on top of reading the SEC press release and the Binance press release, I also went back and realized, oh, you know what? The SEC also did this something against Coinbase. Let me refresh my memory here. Well, Coinbase got their Wells notice, and the only thing that I could really conclusively say was absolutely something super similar between the SEC's Wells notice against Coinbase and the SEC's complaint against Binance is the yield staking, staking coins to get a yield. That was the one commonality that I found between the Coinbase Wells notice and the Binance complaint, is that the SEC just across the board does not like these companies having staking and yield farms. They don't like it. They don't like it at all. And that's the only thing I found that's super uncommon. And I think that the SEC is going to make an attempt, based off what I've seen so far and this commonality here about yield farming and staking, that the SEC is going to say, hey, if you have a crypto and that crypto is producing yield, then it's not actually a crypto commodity. It is a crypto security. Bitcoin is a crypto commodity. At least, we'll have to see, because, who knows what people are going to be doing with ordinals. But right now, Bitcoin's a crypto commodity, and if you're producing some kind of yield, the SEC could make a stance potentially that if you're getting yield from your crypto, that's going to be a crypto security, right? Because you're putting in money with the anticipation of getting a return on that yield. So I don't know. With 100% certainty, I don't know. But if I was to make my best guess with the information at hand, that would be my best guess. And the SEC is taking these actions in order to make something happen as far as getting their actual regulatory boot on the ground. Okay. So with the crypto stuff, done and analyzed, I will say one more thing, though. Let me head over to the Discord, take a quick little snapshot of the Discord. If you want some more crypto analysis stuff, ARK Invest today released their Bitcoin monthly outlook, and it's a 20-page outlook from ARK Invest on crypto. Now, I know a lot of you guys might not like Kathy, right? Kathy Woods. You may not like her. Personally, I still think she's pretty smart. I still think she knows what she's doing, right? She's got a lot of people who are smart working under her. And they still have an asset under management of $24 billion. So obviously there's some people who are either still willing to burn money into these funds and are just really dumb. But I don't think if you actually have that much money into all of these analysts that it's actually gonna burn to the ground indefinitely. I think a lot of people are giving Kathy a lot of flack when she probably doesn't deserve 100% of that flag. She gets some of it. She gets some of it. But if you want some Bitcoin outlook, something to look at. And then there's also a few other things that I posted about. I think TC, it's alpha beta soup, right? He just, for the first time in many, many months, posted his own crypto outlook. I recommend watching that one too. So let's get into the headline here. RBA hike, US dollar lower. And I freaking called it. Let's head on over to the DXY chart. And we'll go over these little things in just a moment. But first, I'm going to go to a 1 hour chart here. And you can see this is this little purple dashed line. This is where I said yesterday, hey, 80% of the time you will end the trading day below this price. And if I bring up the pivots, you can see this is where we ended up closing. The day was red. And it was a big top wick day. So the aftermath of yesterday's daily plan has been quite exciting. Let's go into these charts here. ISM services was a big deal for the dollar moves yesterday. Services PMI came out way below consensus. Consensus was at 51.9, and the actual number was at 50.3. And anything below 50 on PMIs indicate economic contraction. So we're on a knife's edge of entering contractionary territory. The immediate usefulness of this information is that a lower services PMI can translate into a lower CPI. And it has been the services components of CPI that have been keeping the headline number of CPI way above the core CPI. And now that we have PMI, these services PMIs coming down, that's great. And this is a bit of commentary here out of Wells Fargo. And they go ahead and they tell you like, oh, okay. But what they look at specifically, and I mentioned this yesterday, they look at the prices paid subcomponent, subindex. And that came out at 56.2. So the prices paid subindex is a few points lower, but still consistent with broad expansion in prices across the service sector. So prices across services are still increasing. However, this is now the highlighted spot. We have not yet seen consumers materially shying away from higher prices, likely in part due to the fact that slowing inflation amid continued wage growth has given way to a meaningful rise in real household income. So they say while this higher subindex of prices paid, 56.2, is still comfortably in expansion territory, the prices index is trending toward equilibrium. More plainly, prices are still rising, but rising much more modestly. This leads me to believe that even though net that the services PMI came in below consensus, that this is still a leaning hawkish release, right? The thing that we care about is services inflation, right? How that impacts the headline number. And it looks like, yeah, it's moving in the right direction, but it's not moving, fast enough. And I don't think that is particularly constructive data for the Fed pause, right? It's just one extra bit of info. Don't get me wrong, inflation will probably be moving lower. It'll probably be moving lower. But how much lower? Not as much as the Fed would otherwise like it to. Not as much as the Fed would otherwise like it to. And thank you all for watching. I see everyone here and all the likes coming in. I absolutely appreciate it. I even saw a couple of people who just hopped in, liked the video, and hopped out. Seriously, thank you guys so much for the support. Hopefully, you're getting a lot out of these bits of analyses, out of these outlooks, out of my own trading research that I do, and covering all these different topics and actually breaking down why things are moving. Rather than just saying, oh, look at this line that we crossed. I'll do that with my probability distributions and my stats, right? But I also want to know what are the motivating driving factors behind prices going up, prices going down, and then use that to extrapolate out into the future. A lot of people say, hey, you should not be doing any forecasts. Forecasting, doing any sort of forecasting, making any sort of price expectation is a bad thing and is a horrible habit to have as a trader. And I think, no, the more accurately you can forecast, the better. The whole point of being a trader is to develop a mindset where you can try and peer into the future. What we're effectively trying to do when we're trading is predict the future, right? When we're taking a position now, we're anticipating some appreciation in our position out into the future. Well, what are your expectations for that appreciation to be realized or not? Right? Am I planning on buying euro dollar from the dip? Oh man. You might have my notes, man. You just might have my notes. Here, one thing I am going to do is I'm going to bring up this thing. Let's see here. So that's the US dollar one. I need the euro one. Okay, doke. So that's not particularly fantastic for euro. Okay. One thing before I get into euro, just because I'm going past it on the watch list. The S&P hit 4,300 today. It hit 4,300, but it hit it on a pretty bad move because, I mean, if I go down to a 1 hour and I pull up the ISM, right? This is when, actually no, ISM services was released roughly here, so we had this rise up. Wow, I wonder what caused this strong waterfall. I'll tell you, I didn't get anything in my research and my outlooks that actually pointed down to this, but here's one interesting bit of information. Notice the time of this reversal. 10 a.m. Or at least I believe this is Pacific time. The 10 a.m. Pacific reversal. That's interesting, nonetheless. If it was Eastern, I would have, called out like, hey, usually around 10 a.m. Eastern, you get this little reversal. But nonetheless, I think I'm going to have to listen to one or two guys to figure out what was going on here on this day. Because I'm not going to be super confident in trying to make any expectation of what exactly happened on this day, other than net, my bias is still that the high could be higher, but, this could be all the gas that's left in the S&P. It's, again, I got to get a little bit more research. I got to figure out what exactly is going on here, because seeing this sort of tapering off right here, maybe it's just people selling NVIDIA. No, not really. Not really. How about Tesla? Tesla's kept going higher and higher, and today Tesla's just been flat. So I wonder what's going on. I wonder what it is. Yeah, Nasdaq's been trading flat for like last 48 hours. Not fantastic. All right, let's go on to some more FX stuff. DXY did wonderfully. One last thing actually about the DXY. I'm just going to pull up a 1 hour chart. See right here? This is when the services PMI came out. If you go here to this calendar, US services PMI, 7 a.m. There's the 7 a.m. candle. I think that the market found that to be pretty bearish. That services PMI to be pretty bearish. Also, I was right about the RBA. In yesterday's daily plan, I highlighted a bit of analysis out of Westpac, if you recall. The latest, which is Westpac is the largest bank in Australia. So I'm getting some news coming out here. French construction PMIs. China asks biggest bank to cut deposit rates to boost the economy. China's having to do quite a bit of financial engineering. I don't know how good that's going to be long term, even for a situation like the odd, if for the Aussie, if China takes an economic hit here. Hopefully, China finds its bearings. But if China doesn't find its bearings, I got my sights on the Australian dollar as a short. But right now, Aussie is in paradise. Right now, paradise. So let me go ahead and pull this up here, if I recall. Yeah. So on the day, Australian dollar is the strongest. US dollar is the weakest. And then this little screenshot right here was from the trading group. And this was like 3 or 4 hours after I did the daily plan stream last night. And there's my long Aussie dollar trade. There it is. I did exactly what I said I'd do yesterday. And I'll, real quick, hide this because it's coloring the bars. And you can see right there's the long. Right there at exactly the right price. Thanks for the range probabilities indicator. Thanks for the range probabilities indicator, man. That thing got me in smack dab right at the low. And this isn't the first time in a while that these things have helped me catch the low of a day or get in at particularly good opportunities to take the, a trade down into the close from a relative high or relative low. Yeah, man. Good stuff. Now, as far as today goes, you don't come up here all too often. Yeah, you really, really don't. It's quite likely that the top is in for the day. But I gotta tell you guys, this is a scenario with Aussie and with CAD, the Canadian dollar. Because remember in my stream yesterday, I also said, hey, maybe we get a surprise out of Canada. There's still some probability that happens, which the Bank of Canada meeting is tomorrow, Wednesday, June 7th. It's happening tomorrow. Oh, and I figured out I can actually get the Bank of Canada to show up on my economic calendar. If I click that little button and I scroll down, and here it is. Bank of Canada interest rate decision, 7 a.m. Pacific tomorrow. Let's go ahead real quick, look at our closing probabilities for the day. Wow. We're now dealing with tail risk odds. So this is a scenario. This is actually a very good demo, right? Most of the time you close somewhere in this area right here that I'm hovering my mouse somewhere around here you'll end the day. And most of the time when you get a bullish trading day, you're maybe going up to around here, right? But in a super bullish trading day, once you go past, call it here, once you go past roughly this price, this threshold in the distribution, you really start dealing with some more tail risks. You really start dealing with a lot more uncertainty about where you will end for the day. So as far as our upside goes, you can still go higher. Now, outside of these range probabilities. Oh, I'm going to go ahead and delete that real quick. That doesn't really need to be there. 2 days before the RBA did its hike, I already had a bullish Aussie dollar bias. And that was because of these yield spreads. And you can see how the yield spreads got super positive in the 2 days leading up to today. That means that the bond market in Australia was more aggressively raising yields compared to the US dollar. Now, why would the bond market be doing that if it didn't anticipate some increased probability of the RBA hiking? And guess what? Out of Westpac, we got that analysis saying exactly that there was an increased probability, way more than 50% probability of seeing those rate hikes. So with these super positive yields in mind, I'm not going to try and short or sell this thing, because these yield spreads are a leading indicator of FX prices. Yield spreads have been a known leading indicator of FX prices for the last 30, 40 years almost. There are many professional books, many books on professional trading and currency analysis and currency fair currency fair valuations, fair valuation models, I think is the term I'm trying to use here, that incorporate yield spreads. It's important to understand how yield spreads actually work, how they impact markets, and why they lead prices. But this is just a simple indicator that allows you to look at it and say, like, oh, here are some simple colors, here are the simple metrics, here are some different ways of viewing the data. And then you can use it on any time frame you want, 1 hour, 12 hour, daily. And all these indicators get bundled together when you join the trading group. Man, and look at that. You can see how the yield spreads went up. You can just look at the candles and the color of these candles, right? As it goes green, more positive yield spread. So even though these candles look bearish, right? You have these large top wicks. I'm not so certain I actually want to sell these things, because I don't really want to sell against such positive yield spreads. I really, really would rather not. I mean, oh man, and look at that super positive momentum on the M oscillator. This indicator was made by a guy named Mohammed Fawzi, and Mohammed Fawzi ran a very large Sharia-compliant equities portfolio, I believe in the UAE. And he pretty much exclusively used this for a very long time privately, and then went and published a study with back tests and trading rules on exactly how to use this, and it's a free indicator. It's one of my favorite indicators, and one of the reasons why is because on average, it'll give you a momentum, bullish or bearish signal, anywhere between 0, that is on the same bar, or like 2 or 3 bars ahead of the MACD. So, yeah, I prefer this because I think it's got better statistical significance in its signals than MACD. That's why you see when I pull up my MACD, I'm not using a normal MACD. I'm using this special volatility normalized MACD. So then I can compare momentum across different assets. So yeah, it's not like these are just regular TA indicators. These are like, oh, you know, we can do a little bit more. And honestly, this indicator here isn't really TA. This is like I'm watching how spreads are moving and using that to inform my FX trading decisions. So let's see here. What do I got in my notes? All right. Just as a quick as a recap in yesterday's daily plan, I highlighted a bit of analysis out of Westpac, largest bank out of Australia, and that pointed out that there was a massive spike in the probability of an RBA rate hike just in the day leading up to the hike. And the reason for the spike in this probability was the Australian government rising the minimum wage by more than 5% starting July 1st. Now, this long trade I took on Aussie dollar on the day, there are a few factors that I determined before taking that trade. First off, I knew, based off all the outlooks and the research I was reading, the correlation between Australian dollar and equities markets was very high, and I'm bullish on equities markets. So that gave a point over to being long Aussie. And then these daily yield spreads showed me that yields were moving quickly and positively in favor of the Australian dollar leading into the RBA. Then Westpac's analysis came out and told me about the rate hike probabilities jumping because of the minimum wage stuff. And then on the day to day, I was using the range probabilities indicator to tell me where the likely low for the day was going to be. And when I identified where the likely low for the day was going to be, I went ahead and I took that. So it was like this huge combination of a few, it was only like 4 things I just listed out there, but, do you have to be insanely smart to take all that information in and deduce, oh, there's actually some reasonable risk to reward to going along on this pair? No, not really. By having access to the tools and putting the time and effort into actually doing the research, that's the missing factor for most people. It's not that you can't do it, it's that you haven't done it. And quite frankly, this stuff only takes a couple of hours. It may only take you less than an hour a day to do all the trade research necessary that you need just to maintain and manage and be in the know on assets you already got positions on. And in the Plan the Profit Discord, I have an Outlooks channel where I've been posting outlooks every single day. Every day I try and find stuff written by literal PhDs, free research by PhDs, some of the most powerful people in the world, literally. Some of the most powerful people in the world write weekly analysis on what they expect certain markets to do. And more often than not, they're right. Because they've been doing this for 40 years, and they rub shoulders with people at central banks and governments all around the world. So of course they definitely would be in the know. That sort of individual. You would expect that sort of individual to know. So why not read what they have to say for 15 minutes, right? It makes total sense why you'd want to do that. Now, I'm going to go and move on to the other central bank that I mentioned in yesterday's stream, the Bank of Canada, and pull up dollar CAD. And you'll know we've continued to move lower, and the yield spreads are getting more consistently red. The yield spreads are moving more consistently lower. Now, how much lower could we go on the day? I'm not so sure how much lower we can go on the day. I think I think when you go this low, this quickly, this is probably the low of the day. Oh, yeah, that's probably the low of the day. If I could just pick up the probability there. 90.45% of the time, the low for the trading day is in. 90, and this is it updating in real time, all the metrics. 92.25% of the time. Now, just to be frank, you got to be very careful going long past kind of these little thresholds right here. When you start to see these bars and these probability numbers start to get super thin and spread out between a wide price range, you got to be careful, because when you start trading in these areas, your likelihoods of getting a falling knife experience go up substantially. This is all falling knife territory. So be careful taking longs in these necks of the woods. Now, if you want long roughly around here, right, because there's a peak in the probability distribution here for where your lows typically occur between this S1.5 and S2 daily pivot. So that makes sense. Like, oh, okay, I'll go ahead and I'll take a long trade here, put my stop loss at this S2.5 pivot. When you enter, generally speaking, if I could get my measurement tool, if you enter in this sort of pivot zone right here, right? If you enter into this pivot zone, you don't put your stop loss at the bottom of a pivot zone. You put your stop loss at the pivot immediately under the zone you entered. So if you entered long in this zone, you don't put your stop loss at the bottom of that zone, which is S2. You put your stop loss at the pivot under that zone. And don't get me wrong, this thing came very, very close to that drawdown. If I could just get my measurement tool. But what's that? Worst case scenario, that's 22 pips drawdown. Best case scenario, that's a 10.8 pip drawdown. Or stop loss, rather, not drawdown. It's like, I mean, this was a drawdown trade, and the trade would be in profit right now. But if you're taking daily trades and you have something like this to help you risk manage, and you're putting your stops 20 to 10 pips away from your entries, you're going to be using small position sizes. You are not going to be putting 1% of your account on each trade, because if you're trading every day and also trading 3 or 4 assets, your portfolio is going to be so volatile, and all you need is 3 or 4 losers in a row to totally demolish your account. If you're going to do the day trading stuff, you got to use smaller sizes if you want to do it consistently across a lot of different pairs. Or, you know, there are guys on YouTube who do day trade, and they do use quite considerable size when they enter into their intraday positions. But they have a different technique. They have a different strategy, right? They have a different set of probabilities and things that they're precisely looking for. So they have their own repeatable and replicable strategy that they have going on there to get like a 5 to 30 pip return a day, right? Every day on average expected value. But with this sort of thing, you can be a little more precise in anticipating, okay, on each individual asset, where are my levels going to be? Where are my levels going to be on each individual asset? So, with the low out of the way, let's look at our closing odds. I think we have pretty good odds on our closing odds. This makes me feel pretty bullish. So, based off where we are just right now, 82.45% of closes for any given trading day here on dollar CAD. Let's see here. Over the last 3,000 1-hour bars, look back. 82% of the time, you're getting your close for the trading day above, call it this S1 this 134 level, 134.1, let's call it. So let's do this. Let's do this as our little timestamp. Now I am going to point out that these yield spreads are still very, very bearish for the dollar CAD on the day. So I would be very, very cautious. I mean, look at how the yield spreads looked over here. Like you have to see a continued reversal. You need to see the yield spreads improve in real time on the day, from day to day, and then also have some news catalysts ahead of you. And you know what? Even if the Bank of Canada holds, I don't think it's going to really hurt the Bank of Canada. I don't know if you guys follow Financial Juice all that closely or not, but they recently sent out an email for Canada economic indicators that they call their deviations. And what they do is they just go through every single time Canadian employment and the Bank of Canada had a meeting, and they measure, okay, from the open of the day, from when the event occurred, how much can we generally anticipate the currency pair to move up or down? Simple question. And if I recall correctly, for the Bank of Canada, unless it was a hike, just straight up, unless it was a hike, then the Canadian dollar would appreciate. But if it was no hike, then it was more or less 50-50, whether or not you got a bit of a move up or a bit of a move down. And then if you had a cut, well, actually, I don't even think that there was cut data in there because it was only for this most recent cycle. Alrighty. Now, Ahmed, he actually mentioned euro dollar here. So I'm going to, as the last chart of the day, bring up euro dollar. Alrighty. So right now we have two ECB speeches. We have construction PMIs coming out right now. Italian construction PMIs, yeah, all the construction PMIs are kind of in the garbage right now. Oh, wow, we had a bit of a dollar strengthening move from that earlier news when China asked their biggest banks to cut deposits. We'll look at that real quick on the China yuan after this. But today we still have one more ECB speech. The yield spreads on the euro dollar are moving more in favor of the euro. Don't get me wrong, this looks super mixed, and net they are negative for the euro. But they are improving considerably compared to this point in time right here where you see all these red bars. Yield spreads were quite terrible for euro dollar. Now we're back closer towards neutral on the yield spreads. And all we got to do is see some positive movements out of the yields to actually see some green bars here. See some green bars. But also we have the ECB meetings coming up, and the ECB meetings, they'll make a big difference considering that people are anticipating 50 to 75 more basis points of rate hikes out of the ECB. So I think it's time to start looking for long opportunities on eurodollar over the next week or so. Not right now. Not right now. Right now is not the time to be looking at eurodollar longs. We gotta let this thing cook. Gotta let it cook. And then let's check up on that news. Go to like a 30-minute. And yeah, you could see we had this pop on that news. China asking all that stuff from their banks, halt deposits. Okie doke. With all that, there's maybe one more thing with oil. I can just briefly mention. We've been going down, down, down to the bottom of the sea. We've completely reversed the OPEC Plus gap, which is not fantastic. Not fantastic for oil. And not fantastic for commodity currencies like the Canadian dollar, right? I'm still holding shorts on US dollar CAD, which is long the Canadian dollar. And if we don't bounce here on oil, there may be an opportunity sometime this month to get long the US dollar against the Canadian. There could be an opportunity sometime this month. Same thing with an opportunity sometime this month to get long the euro, but I don't know. I'm still in the camp of lower euro for longer. Shorter term, euro certainly could go higher, but I need more evidence out of euro before I really commit to going long euro. All right, guys. Thank you all for watching, and I'll see you all in a bit tomorrow for the next daily plan.